Welcome back, students. So in this session we are going to learn about compound entry. So compound entry is an entry in which more than two accounts are involved. So it can either be more than one account on the debit side or more than one account on the credit, or even both debit and credit. So when transactions of similar nature occurring on the same date, it can be clubbed together. So let me explain this with an example. So on Jan 31st, 2020, paid salary 10,000, paid office rent 5,000. So these two transactions are of similar nature. The important thing is that when transactions of similar nature occurring on the same date, these are the two things. It should be of similar nature. If you want to club transactions together and write one compound entry, you have to make sure that the transactions are of similar nature and it should happen on the same date. Only then you can club them together. So here in this case, January 31st, two things, right? Paid salary is being paid. Similarly, office rent is also being paid. So both these transactions are happening on the same date. One condition got over. The other one is it should be of similar nature. Both are expenses and cash is going out. When you make a payment, cash goes out. Able to understand? So it is satisfying both the conditions. Transactions are of similar nature and it is of the same date. Now if you want to write separate entries for these two transactions, you will be writing salary account debtor 10,000 to cash account 10,000 paid salary. Office rent account debtor 5,000 to cash 5,000. So rent paid. Okay. So if you want to write these two transactions separately, you can write like this. If you want to write a compound entry, here salary account debtor 10,000, office rent account debtor 5,000 to cash. So instead of writing cash twice, you are going to club both the things together. Anyways, when you are paying a salary or when you are paying office rent, cash is going out. So when you make payments for these two things, totally 15,000 is being paid. So cash is moving out of the business to the extent of rupees 15,000. So salary and office rent paid. This is how you can club two transactions which are of similar nature. Able to understand? Any doubt regarding this? You can type it in the comment section so that your queries can be answered. The next I am going to show you few examples. It is not for compound entry. The next transaction. So paid 4,800 in full settlement of rupees 5,000 due to creditor Kirtana. This is also a compound entry. But then you have to know when a settlement is being made or how to deal with discount received. So all these things you can understand better now. So paid rupees 4,800 in full settlement of 5,000. Actually, you have purchased goods from Kirtana for 5,000, which is a credit transaction. You haven't made any payment yet. Now you are going to settle that. Actually, we have to pay 5,000 to Kirtana, but now we are paying only 4,800. So what happened to that 200? The 200 is nothing but the discount received. Our creditor Kirtana is giving us a discount of rupees 200. So what should be the entry? Kirtana account debtor to cash account 4,800 to discount received 200. Let us first analyze how we are arriving with this entry. So what are those accounts involved in this transaction? Here we are getting 3 accounts. Normally you have only 2 accounts involved in each and every transaction. As we are having more than 2, it is a compound entry. So Kirtana comes under personal account, cash comes under real account, discount received comes under nominal account. We have classified these 3 items now. So what is the rule? For personal, debit the receiver, credit the giver. When we are making payment to Kirtana, Kirtana is the receiver. So we have to debit Kirtana. Cash comes under real. So debit what comes in and credit what goes out. When we make a payment, cash is going out. So cash must be credited. The third account is the discount received. This comes under nominal account. So what is the rule for nominal? Debit all expenses and losses, credit all incomes and gains. So this discount received is a gain. Discount received is a gain. So as per the rule, we have to credit all incomes and gains. That's why we will be writing Kirtana account debtor. Actually, we have to pay Kirtana rupees 5,000. Right? But we are paying only 4,800. Cash is going out of the business only to the extent of 4,800. The 200 is the discount received. So, discount received 200. Able to understand this? Shall we move on to the next topic? So, now we are going to see about the purchase return and sales return. So, what is purchase return? We are returning goods to our supplier. We have purchased goods and now we are returning it back to the supplier. There may be n number of reasons. It can be a defective product or it may not be according to the orders, prescribed order, or the price. In case of any price variations, or if the standard is not good, if the quality, or all these things are some of the reasons for return. So you may get a better product from another supplier. So you want to return these goods back. It can be anything. These are some of the reasons for return. Right? So purchase return is nothing but goods are returned to our supplier. There is another name for purchase return. Return outward. Other name for purchase return is return outward. It is going out of the business. Purchase return is otherwise called as return outward. Sales return. Sales return is our customers are returning goods back to us. Goods are coming back to the business. So again, the customer may think it is not according to the orders placed. They may not be convinced with the price, or it may be of a defective thing, or poor quality. It can be any such reason, right? So our customers are returning goods back to us. It is called as sales return. So the other name for sales return is return inwards. Inwards, it is coming back to the business. Now, I will explain this with an example. So, goods return to Y & Co. rupees 4,000. So, goods are being returned. To, when you happen to see the word to, we are returning back to our supplier. Y & Co. is our supplier. So what are those two accounts involved here? Goods are being returned, so it is a purchase return. Y & Co is our supplier, so Y & Co we have to take it as such. So purchase return comes under real. We are dealing with goods. So I am considering this as a real account item. So under real, what is the golden rule? Debit what comes in, credit what goes out. When goods are being returned, it is going out. So credit what goes out. Coming back to this side, Y account. Y & Co comes under personal account. As per the personal account, debit the receiver, credit the giver. So when we return the goods back to Y, Y is receiving those goods. So debit the receiver. So what is going to be our entry? Y & Co account data to purchase return. So goods are returned to Y & Co. The next one, I will show you an example for sales return. Raghavi returned goods worth 6,500. So Raghavi is our customer. So Raghavi comes under personal account. Return goods. When customers are returning goods, it is obviously our sales return. Sales return, I am going to consider this as real account item. Right? As we are dealing with goods. Raghavi comes under personal, debit the receiver, credit the giver. When Raghavi is returning those goods, she is the giver. So credit the giver. Sales return, as I told you, we are considering this as a real account item. Debit what comes in, credit what goes out. When goods are coming back to the business, debit what comes in. So it has to be debited. Sales return must be debited. So what is going to be the entry? Sales return account data to Raghavi account. Raghavi return goods. Able to understand?